Welcome to the Snapshot edition of the Daily Video Update. This is being prepared Thursday, April 21st, where I'll briefly discuss the action in the market today and then see how things look for Friday, April 22nd. And it was quite a day. We saw a very large gap to the upside, and it looked like things were really positive at the beginning. And then we kind of fell back and started filling in the gap. And then we dropped below the pivot. Then we went negative. And the selling just kept going and going and going. And a lot of that is attributed to some Fed speak that has been coming out. It was hoped that when Chairman Powell gave a speech on Thursday that he was going to say, well, we think inflation is pretty much peaked out right now. Well, he didn't end up saying that. And the markets didn't like that, and the selling just continued. So we did have a gap higher right at the open, and a lot of that can be attributed to Tesla. They came out with an earnings report that was taken as very positive, and that looked like things were going to really bump up prices. We actually opened above R2, and that's about as high as we got. And we topped out pretty much 20 minutes into the day and then spent the rest of the day just going down and down and down with a few little pit stops along the way. We were up 1.2% at one time. Then after that, it just did not look pretty if you are bullish. The selling took us below the pivot. Then we went negative. We attempted a bounce at just above R2. Into the close, the selling continued. There was minimal buying going into the close. That may have been some short covering going on. People that ended up going short earlier in the day locked in some nice profits, and they have to buy to get out. So that pushed prices up just a little bit. We saw about a 2.7% intraday move. And people are like, wow, oh man, look at the markets all over the place. When you look at the daily chart, we really haven't gone anywhere. We're right back down to where we were just a few days ago. But for the day, we ended up being down 1.48%. The one thing that was a little different is that volume was above average. So to see above average volume on a down day, that's pretty negative. We've been seeing a lot of below average volume lately. The technicals right now are pretty much negative. The positive things that I was talking about, those are pretty much off the table right now, except we're back into a short-term oversold condition. So we may see a little bit of a bounce based on that. The big concern right now are interest rate or inflation and interest rates. Of course, we have all the different geopolitical concerns, earnings reports that are coming out. Some are seen as positive, some are seen as negative, and that can sometimes set the tone for the overall market. So our technicals, as I've said, are negative. The damage had been done to the improvements that we were seeing. There are still some places of hope, and please go in and look at the full-length version of the daily video to try to see what I point out there. The S&P opened up above the 200-day simple moving average, and that is seen as quite positive. But then we just waved at all of our moving averages as we were going by. We dropped below the 50, and then we ended up dropping below the 200. We have two yield curves that are now inverted again, the 10 to the 5 and the 30 to the 5. We want to keep an eye on that. Are other yield curves going to go inverted again? We had got back to the place where none of them were inverted. And sometimes what can happen is we see a spike up in stock prices after that happens. But now that we're going back inverted again, we kind of have to put that on the table for a little while. Tesla did provide some positive backdrop to the open, but then, as I said, the Fed speak took prices negative. And apparently there's one of the people in the Fed that's going to retire that the market likes, and they took that as negative. I mean, they could have taken gravity as negative on Thursday. The economic reports that came out, the Philadelphia Fed index, it decreased, and that's not a real market mover, nor is the leading economic index. It showed a bit of an increase, but then the markets don't pay attention to that all that much. We are still trendless, and I'll bring up the ADX to show you that. We're negative as far as our bias because we had a strong down day, and our momentum continues to be negative. One thing that did come out was the weekly survey of individual investors, and it's showing them at extreme negative. It improved a little bit from the previous week, but we often use this as a contrary indicator. When they are extremely bearish, we want to be looking for things to go up. That worked really well in the middle of March. Now, some of our other sentiment indicators are not really extreme right now, where in the middle of March, they were all coming together at the same time. But these are individuals who tend to be wrong. They tend to react to what happens in the market instead of proacting about what will happen. And so we just want to keep an eye on that, knowing that there's real negativity that's pretty extreme right now. We also got the RIDEX bear to bull ratio, and it did spike up, but it's not giving us a real solid upward movement reading right now. This was what we saw back more in the middle of March. We want this thing to just go way up top, but it is increasing for right now. Also, the active money managers out there, over the past week, they did increase their exposure slightly to riskier investments, which means stocks. Now, after we end up really going nowhere, we'll have to see if this drops next week, but all we can go with right now is what we see. As far as the Fed, I just want to bring this up, and I'll go over it more in the weekly video that I put up there. You rarely are going to see something this certain. As we get closer to the Fed meeting, there's a 99.8% chance that after that meeting, we're at 25 to 50 right now. After this meeting, they're expecting it to be 75 to 100, which is a 50 basis point move or 0.5%. And there's pretty much across the board unanimity, if you will, in the market that is what's going to happen. And then we also can see where at the beginning of March, this purple line, we weren't even thinking about a 0.5% move upward. Well, look at how this has just skyrocketed as we went through March and are now into April. Then this is how it looks on the daily chart. And this is why I say we haven't really gone anywhere. It looked like we could have been breaking out to the upside, but yeah, we had a big down day, but we've been here before. We're just at the lower end of where we've been. Yes, we did have some damage done on a technical basis, but as far as anything being decided, it just hasn't happened yet. We're still within this range that we've been in. And then here's the ADX, which continues. It's more flat, but it's still declining. It hasn't crossed above the moving average yet. These lines were just getting ready to cross, and it looked like they were going to cross positive with the green going above. That didn't happen. The red turned back up and the green turned back down, but we're still in a more trendless overall environment. So if you do a lot of credit spreads or iron condors, things like that, you won't get as much because we're not as in volatile of a situation. So if you sell options, you won't bring in as much, but there tends to be less risk when we're in a more trendless environment. It's when we start hitting our strike prices, that's when some real damage can be done. And then looking here at our moving average spaghetti tree, we started out at the very top. We got up to the 100-day simple moving average and then just sliced through all these other moving averages and closed below each one of the ones that are plotted here. This is the 100-day. And if there was an upward area of resistance, it was the 100-day simple moving average. Here's our rainbow, which shows that we're now back down at the bottom. Here's a little shorter term based from the 2 to 50. This is probably the shortest term rainbow chart that I show here, where we're down at the bottom. And then here's more middle, where we also are at the bottom. And then we're below the 200-day simple moving average also. So that's more negative for our longer term trend. The dollar, it bounced back a little bit on Thursday, and we're still above 100. And then this is the yield curve that I showed yesterday, the 10 to the 5. It is still negative. Well, we were joined by the 30 to the 5, and it's just slightly inverted now too. So now we have two yield curves that are inverted. And then this is what we want to keep watching for. When the staples top out, sometimes that means a bottom in the market. Well, the staples are just going up and up and up and up right now. So we can't say that we've hit any kind of a top right now. So what is our outlook? The technicals are negative. We're still in that intermediate term trendless range that we've been in pretty much for the whole year. Growth and value continue to battle back and forth. We still have the supply chain issues, but those are still part of the scenario, but not really the focus currently. The big economic report coming out on Friday is the preliminary report for the market manufacturing PMIs, purchasing managers indexes. Those can be influential, especially if they rise or go down more than what's expected by the markets. And then we have all these different geopolitical events, with inflation and interest rates really being the big one. What really spooked the markets was a lot of Fed speak and just worries about the Fed right now. So what is our scenario? We are now in scenario number 3. That's the one in yellow, where we are below 20 with the ADX, and we're in a choppy type of an environment where if you look at the daily bars, we haven't gone anywhere. What could happen for things to keep going down? If interest rates go up, that might really put pressure on stocks, as well as some inflation fears, especially with that economic report coming out. And then earnings can also sometimes feed into the market. They tried to on Thursday with Tesla, but that didn't last very long. And let's see, and we are short-term oversold, so we might get a bit of a bounce from that. Okay, and we can also put that in the up category or scenario where we still have this positive backdrop. This is off the table now because some of our yield curves have inverted again, and the staples spiking, well, they continue to go up. So we don't know if we've reached the end of that yet. The technicals, the moving averages and pivots may provide some kind of support or resistance right now. So that's kind of where we're at. So our conclusion is we are negative with the S&P overall. Short term, we're negative but oversold, so we might get a bounce there. Intermediate term, we're negative. Our oscillators are negative, and we're below a lot of really important moving averages right now. Long term, we are negative because we're below the 200 simple moving average. Here's some of the other videos. If you want to have a more in-depth look at my analysis, please look at the full-length video. So thank you. Have a wonderful Friday, and I'll prepare the next snapshot video after Friday.